Hello, everyone, and welcome to our IEEE Young Professionals webinar. Today is actually the second part of a three-part series that we have on member benefit insurance webinar series. Today we have Mercer Insurance, which represents actually regions 1 through 7. So that's pretty much all of North America. We have Graham Froehler. He's a principal at Mercer. And we also have Jeff Ambrose. Before we get started, though, just a couple of introductions. I'm Matthew Karras, the webinar specialist for the MGA Young Professionals Board. I'm also the vice chair of the communications and marketing team at the Young Professionals Global Board. And in case you didn't know, we actually have monthly webinars starting in 2014. Continued on into 2015, and then we are going to be continuing on to 2016. So just be aware. Audience participation, please, if you have any questions, type any questions you have into the question box below. You can upvote questions, but all questions are going to be answered. At the end of the webinar, I'll be relaying them back to Graham and Jeff at the end, and all questions will be answered. In case you haven't known, we have this new initiative at the Young Professionals global level. We're going to be hosting free meetup events at global high-impact conferences all around the world. And the good thing about this is that you actually don't have to register for the big conference. You can actually just attend our free event that is held in conjunction with these high-impact global conferences. So we just had Web Summit in Dublin last week, in addition to IEEE TechCon in Macau. We had a presence at South by Southwest in Austin, and the International Microwave Symposium was a big hit in Phoenix. So just be aware that we are having these high-impact conferences around the world, and they are free for all young professional members. Please connect with us online. We offer 2 new career-based services, Mentor Center and Resume Lab. We have a very big presence on YouTube, so please check out our videos there. It's approaching 100 videos, and please like us on Facebook. We have over 10,000 likes on Facebook. If you haven't done so already, please join our Young Professionals community on the new IEEE Collaboratech tool. We'll be slowly migrating all of our content onto IEEE Collaboratech, so hopefully you'll be able to get all the information you need, including all the information for those high-impact conferences, meetup events that we're starting up this year and next year. And today's webinar is part of, like I said, part of the Member Benefits Insurance webinar series. Regions 1 to 7 Mercer. We have 2 speakers, Graham and Jeff. There is a little bit on them right there, but they're going to be introducing themselves a bit more thoroughly in the coming slides. So Graham and Jeff, please take it away.
Well, thanks so much, Matt. Really appreciate it. Good morning, everyone. This is Graham Fuller again, and as Matt mentioned, I'm a Principal Senior Relationship Manager for Mercer Consumer. Mercer Consumer is the insurance program administrator for the IEEE member group insurance plans. Just so you know, we're celebrating our 53rd year of partnership with the IEEE, and we are absolutely honored to be a partner with the organization. Also, as you heard, Jeff Ambrose, who is the program manager who leads our professional liability engineering program for Mercer Consumer, is with us, and he'll be talking a little bit later in the webinar. A little bit about myself. I have been with Mercer Consumer now for almost 20 years. My responsibilities include leading a team of client executives that oversee the day-to-day Mercer operations which affect their client portfolios. I am a graduate of the University of Iowa. I hold a degree in political science, and I also am licensed in life and health. Before I begin, and enough about me, before I begin though, I really did want to take a moment to thank the IEEE Young Professionals team, especially Mario Milicivic and Matthew, who coordinated this webinar, and also would like to thank Lynn Koblin, who is a senior manager at IEEE, and she is my partner as well, and has provided us with this opportunity to speak, and we can't be grateful enough. So Mario, Matt, Lynn, thank you so much. A little bit about Mercer. Matt, if you don't mind changing the next slide. As the insurance program administrator for the IEEE member group insurance plans, Mercer is a global leader in talent, health, retirement, and investments. Really what we do is we help our global client portfolio advance the health, wealth, and performance of their most vital asset, which is their people. So again, excited to be here today, and as always, really look forward to answering any questions at the end of this webinar. So Matt, why don't we go ahead to the next slide. Everyone, as you can see, today's presentation is intended to be a vibrant discussion about those items that you, as a young professional, need to think about and plan for as you work to build your career, forge a business, and even perhaps start a family. I'm going to begin the discussion by talking about some basic planning tenets a young professional should think about from a personal income and an income protection perspective. And then, like I said, I'm going to turn the microphone over to Jeff, who's going to lead us in a discussion concerning items that you need to think about now if you're starting your own business, or perhaps address in the short term if you already have a business and discover you have a deficiency in, say, your protection. Before I go on, and as always throughout the webinar, we urge you to consult your financial institution, financial advisor, and or attorney in all matters concerning your business. As Matt just said, would like to ask that we hold all your questions until the end of the presentation, at which time Jeff and I will be more than happy to entertain those. So Matt, why don't we go on to the next slide here? Time and time again, I've spoken with so many young people, young professionals just like yourselves, and they have seemingly have everything planned in their lives to the point of perfection. And then I ask them, so what happens to your stuff or even your family in the event you pass away? And I got to be honest, the answer more often than not is, well, a shrug of the shoulders and a shake of the head. And when we're younger, I'll be very honest and say, we all feel that bit of invincibility and think, I'm good, nothing's ever going to happen to me, don't need life insurance now, I'll get it next week, I'll get it next month, I'll get it at my 30th birthday, my 40th birthday. We always seem to kick that can down the road. But in reality, should you pass away, those outstanding bills, including final expenses, need to be taken care of. They don't just go away. They don't just go into the ether. And for those of you that might have young families, continuing their way and quality of life, providing for mortgage payments, paying for a child's education, it's a very real need and can be addressed, even partially by the purchase of life insurance. And if you look at the slide itself, these are some interesting statistics from a recent LIMRA survey. 85% say most people need life insurance, yet only 62% have coverage in place. So they're saying it is a necessity, but they wait for another day because it's certainly not a priority in their lives at this point. Even further, 86% say they haven't bought life insurance because it's too expensive, yet they overestimate its true cost by more than 2 times. One of the things I'd like to point out to everyone on the webinar today that the IEEE and Mercer Consumer have partnered to produce a very vibrant website. It's IEEEinsurance.com. And there is a rate calculator, a life insurance rate calculator out there that I would encourage everyone to go out and explore on that site. And you can see on that site just how inexpensive term life insurance is, and kind of supporting the fact that a lot of people think it's more expensive than what it is in actuality. Matt, why don't we go on to the next slide? So why term life insurance? Why life insurance? And the answer is twofold. Number one, to help meet long-term goals, and number two, to cover short-term needs. With respect to those long-term goals, term life insurance, it's going to help replace earning power. As I said, it's going to support any dependents until they can become self-supporting. It'll also help to pay mortgage and property taxes, and also pay off any type of outstanding student loans. And from a business perspective, there is a type of insurance called key person life insurance. So what that does is that insures the business owner, and the beneficiary is the business. So if something were to happen, the proceeds go back into the business to help keep that afloat. Secondly, let's talk about covering short-term needs. So there's three major tenets there. Life insurance will help cover the funeral and burial expenses, payment of immediate expenses, light bills, utilities, things of that nature, day-to-day expenditures, and finally, payment of final medical expenses. Again, once you pass away, financial obligations, they still have to be met. They're not forgiven. And really what we have found is life insurance, particularly term life insurance, provides a solution to that. Matt, let's go ahead and go to the next slide, please. So, as we go into our career phase, we need to take a look at our life insurance needs every single year. And you need to evaluate that because you might need to adjust it. You might need to buy more. Maybe you're in a position where you don't need as much to cover. You don't have as many obligations. So a few things to take into consideration when you're evaluating it. So every year, have you gotten married? Have you had a child or children? Are you caring for a relative? More and more these days we see with the skyrocketing costs of nursing home care, at-home care, individuals are taking care of their parents who are in need at home. So if something were to happen to you, a life insurance policy and the proceeds from that life insurance policy could go to pay for a caregiver for that parent or relative that you're taking care of. Going on though, other things to consider when you're considering life insurance. Have you bought a new home? Have you changed jobs? Have you seen a change in your career? Have you gotten a promotion? Have you gotten a raise? Many people on this webinar are going into a very positive trajectory in their careers, right? So they're starting to see their income increasing, and you need to plan for that. Also, starting a business, and something we're not going to really talk about now, though, is planning for retirement. Again, all of these need to be considered when you're looking at your life insurance needs. Matt, why don't we go to the next slide, please? A couple of things, and this webinar, just so you know, we're not intending this to be any type of an advertisement. We're just trying to, really talk about the planning aspect for yourselves. But the IEEE Member Group Insurance Program does offer 3 term life insurance products, solutions that we feel are right for a young professional engineer. There is an annual renewable term life insurance product. That's the typical term life that we talked about earlier, then a 10-year level term and a 20-year level term. The two latter ones are actually life insurance policies that you can buy where your premium and benefit amounts stay locked in for a 10 or a 20-year term. Again, we won't get into that. We know that we want to be sensitive to everyone's time today, but again, if you want to see what those plans look like, I'd encourage you to go to IEEE Insurance, IEEEinsurance.com. Matt, why don't we then move along to the this next slide. Long-term disability income insurance. A lot of people have heard about it, but they don't really know what it is. But for the young professional, it is so important to know what it is because, and you'll see in a couple slides from now, the rate of incident for long-term disability as it affects young people, young professionals, is starting to grow, and it's becoming very concerning. But quickly, what is long-term disability income insurance? It's an insurance policy that pays a disability benefit as a partial replacement of income lost that you lose due to an illness or injury. You can continue to read the definition on the screen. But again, this is the portion of the webinar that I consider to be so very important, especially in today's uncertain economy. All too often we see media reports, infomercials, and the talking heads opining about the need to protect our assets. Where are we putting our money? Are we making sure our money is working for us? However, we really got to ask ourselves here, are these folks focusing on the most important and the biggest asset? And I want to take just pause quickly here and have you ask yourself, what's your biggest asset? What does everyone think their biggest asset is? Matt, I'm sorry, can you go to the next slide, please? Is it your house? Is it your car? Is it your stuff? Is it anything you've accumulated? Go ahead, Matt, to the next slide. Actually, It's your ability to earn income. And if your ability to earn income goes away, everything else, and I mean everything else, could be perilously impacted. And that's why we're talking about disability income insurance, and that's why it's so important to consider. Matt, let's go to the next slide. So, the first thing we need to do with respect to disability insurance is ask ourselves, do I need it? And there's some facts here that kind of support the answer to that, saying that yes, most people do. So let's take a quick look at this. A couple of things that I'd like to point out. 43% of all individuals on disability are under age 50. I said age 50. These people, and those of us who are moving into that, we don't want to admit that we're 50, but 50 is still young. And so these individuals who fall in this category, these people are young, they're now faced with some very challenging financial obstacles, especially if they don't have disability income replacement insurance in place. So, and another alarming fact, a 20-year-old has a 25% chance of incurring a disability lasting longer than 3 months in their career. And I would suggest to the audience today that statistic continues to grow. That number, that 20-year-old, the 25%, that continues to get larger and larger. So let's, something to think about, but let's also look at the likelihood of disability versus other events. So in the terms of death and dying, disability versus death, 1 out of every 106 people. A home fire, 1 out of every 88 homes. Serious auto accident, 1 out of every 70 autos. But disability, 1 out of every 8 people. And so that should really tell us how important it is to have that protection in place. Matt, let's go on to the next slide if you don't mind. So let's take a look into let's kind of take a deeper dive into the current causes of disability. You can see from the chart here that cardiovascular and musculoskeletal disabilities make up the majority of the reported disabilities. And did you know that work-related disability claims make up less than 5% of all disability claims, and the average duration of the claim is nearly 3 years? This is a very compelling statistic, because there is a perception that most disability occurs in the workplace, and it's not. And not trying to be humorous here, but disabilities can be caused just by stepping out your front door. You can disable yourself by falling down the stairs. In my case, falling up the stairs sometimes. It's one of those things where you just don't know what could take you away from the ability to earn that paycheck and that income. So, Matt, let's move on if you don't mind. So, we've talked about causes of disability. We've kind of given you some facts and figures. So, as we've talked about this, we need to look at how to protect that biggest asset, the ability to earn. And the first step in protecting yourself is to plan. And that plan itself, with respect to disability income insurance, payment or paycheck protection, comes in the form of a tiered process outlined on this slide. And Matt, you can go ahead and fill in the rest of those arrows. I'll just talk through this. Thank you. The foundation of the planning pyramid is the income and disability insurance. If you don't have that in place, you can't build from there. So your foundation is that paycheck protection, and then you further protect yourself through auto, life, health, and property insurance. Next level, retirement plans, and of course we won't get into that, personal investments, savings, which we're going to talk a little bit about at the end of my piece, business ownership, and then finally how you're passing that on. So again, the foundation of this is the disability income protection, and once you have that, then you can start layering it on. But if you don't have that foundation in place, the ability to plan upwardly is greatly affected. Matt, next slide, please. So let's talk a little bit about disability insurance basics. And we're going to talk about a couple of things. We're going to talk about individual disability versus group disability. We're not going to spend a lot of time on the group disability, because really what we focus on at Mercer Consumer is individual disability. The IEEE does sponsor an individual disability income insurance plan, and we'll talk a little bit about that coming up. But individual disability basics. So the individual disability insurance plan, it's going to replace income based on a flat dollar amount up to a maximum % of your salary. And those benefits are payable after a specific period of disability has been incurred. And what we do is there is always with insurance a deductible. We call that deductible as respect to disability insurance is called the elimination period. And those periods can be anywhere from 30 to 360 days. Once you have satisfied that, then the disability benefit comes into play. The benefits are payable for a specified length of time. We call that the benefit duration period. And those benefits can be paid anywhere from 2 years to SSNRA, well, as Social Security, if you will. Benefit features can include an own occupation period during which the criteria to meet the definition of disability, it's based solely on your own occupation, after which the definition is based on any occupation. One of the other things that is very, very important to talk about as respect to individual disability plans is that the benefits that are payable are not taxable to the claimant. And here's why. They're not taxable because it's a policy that you pay for out of your own pocket using post-tax dollars. Most group plans, ones that you get through your employer, are paid with pre-tax dollars. So when the benefit becomes payable, you're taxed on that. And we'll talk a little bit about that as we start talking about how to calculate the right benefit amount. So Matt, since I mentioned calculating the right benefit amount, let's move on, shall we? How to calculate the right amount of your benefit to protect your assets, rather. Number one, you need to determine the amount of asset protection you already have in place. So do you have group disability or individual disability already in place? Do you have other insurance, either worksite or voluntary? Do you have a savings account? Do you have vacation or sick time that you would use in the event you're disabled? Secondly, you need to review how each of those plans work individually and combined, because a lot of these disability policies have other income offset sections in those policies. Also, you need to calculate how much of your income is actually replaced based on the benefit maximum. And again, be sure to factor in taxability of your group disability benefits. Also, determine if you have if you're going to anticipate any other sources of post-disability income. And finally, I like to call this the tabletop exercise, is you need to sit down at the table and calculate your monthly financial obligations. So what do you pay in rent or a mortgage? What are your utilities, groceries, gas, transportation expenses, even right down to the cable, internet, and phone? All of this plays into determining what your monthly disability income benefit amount should be. Now, this seems like kind of a taxing exercise, and it can be. So what we have done at Mercer, we've worked with IEEE, and we have come together to develop a disability income needs calculator. Again, I don't want to sound like an advertisement, but the calculator is located at IEEEinsurance.com under the disability tab. Please go check that out. It'll ask you some questions, and it's a very nice tool that eliminates the need for you to go to the kitchen table some night with the calculator and kind of put all of this together. So a very, very handy tool that we're making available to IEEE members. Next slide, Matt, if you don't mind. A couple of other things I'd like to talk about regarding the advantages of individual disability policies. This, again, it's not an employer-sponsored plan, so it's completely what they call portable. You can take it anywhere. It's not dependent on your employment with one entity. This pays a benefit in addition to your group benefit in order to achieve a higher income replacement percentage. And finally, there's a couple of other facts here. Again, emphasizing group benefits are generally taxable. As a group benefit through your employer is generally taxable, not in all cases, but in most cases, after taxes, income replacement is closer to 47% rather than the 60% most policies afford for. So again, to reiterate, a group plan, even though you will see that it could pay up to 60% of your monthly income, because it's a group plan and because it's usually taxed afterwards, That income replacement is usually closer to the 47%. An individual policy paid with post-tax dollars, as I said, it's a non-taxable benefit. So there is an upside to exploring individual disability insurance policies. And again, being sensitive to time, and I know Jeff is out there and he's very excited to talk about his portion of the program, I'm going to move into the final piece of the conversation I have for you today. And, you know, I want to take some time to briefly touch upon it. And it's kind of funny because it's so basic and elementary. However, it seems to be such a foreign concept in today's fast-paced times. You know, and that talks about, and that's about savings, right? So, you know, as we discussed, insuring yourself and your income it's a necessity in today's economy. However, it's equally important to focus on the immediate and the preservation of your way of life should your career take an unfortunate turn, resulting in a loss of income, which is used to pay your bills. I'd like to spend a few minutes talking about the importance of savings and discuss some basic tips to think about. And again, this may seem relatively remedial. However, you know, with the saturation of credit cards and the unfortunate credit card debt that results in some instances and the ease of obtaining credit to offset these expenses, people seem to have forgotten the basic rule most of us have heard through our parents, and they taught us as children, which is put that money in your piggy bank, save for that rainy day. You know, now that's such a simple lesson, but it's just become so increasingly more difficult in today's society. However, what I want to do is we talk through this, and again, we're just going to go over some basic tips, but I wanted to talk to you about some disturbing facts that were recently published by the Huffington Post, and you can see it right here next to the piggy bank. 75% of Americans don't have enough savings to cover their expenses for 6 months. Of that 75%, 37% of those individuals have less than 3 months worth of savings. So if they find themselves out of a job, the window to continue to support their standard way of life is very, very small. And by having a simple savings account, saving for that rainy day, it protects you, and it helps you preserve your way of life longer if in the unfortunate event finding, you know, gainful employment proves to be difficult. So really, by not having access to that cash cushion, if you will, in the time of need, individuals really do risk not only their long-term financial situation, you know, talking about credit card debt, low credit scores, they also start running the risk of things like bankruptcy, foreclosure, and other less than desirable financial perils. And the purpose of this webinar is not to scare anyone, but it's the grim reality and the facts behind what happens if you don't have that cash cushion. So Matt, why don't we go on to the next slide, please? You know, that all said, I've got a very simple, probably bullish example, but one can see how easy it is to accumulate that cash cushion I spoke of earlier. You know, assuming a 6% rate of return, utilizing compound interest, saving just $25 a week for 15 years, could yield up to $31,000. And I'm not saying that that's going to work for everyone, but what I am saying is that putting any amount you can into a simple savings account can help you build protection. And sometimes it's as easy as asking yourself, you know, can I skip pizza this Friday night and put that money away for that rainy day? Matt, why don't we go ahead and move to the next one? You know, and again, very basic advice. You know, always urging folks to consult your financial advisor or your local bank for specific planning advice. But there's some quick tips for saving. You know, number one, track your expenses and plan a monthly budget. I think all of us remember our parents sitting down every month, if you will, going through at the kitchen table, going through the monthly budget planning. You know, when are we going to eat out? What are we doing? I mean, some of us as kids, we probably looked at that and had a chuckle, but it was a very well thought out plan and the strategy behind it. And I would encourage everyone to do that. Second of all, pay cash whenever possible. Try to avoid credit card debt. The more debt you accumulate, that affects your credit scores. And what you don't want to do in the event of having a negative employment issue is having to deal with outstanding credit card bills as well as everything else that's going on. The third, you know, set savings goals and prioritize. save for those rainy days, but then know what you're saving for and prioritize. I mean, if it's a car, put yourself on a calendar and save according to that calendar. Rushing into something, it always tends to have a negative output. So I would encourage everyone to set those savings goals and prioritize. Going back to the chart or the facts that I gave you a little bit earlier next to the piggy bank, try to reserve 3 to 6 months of expenses in a short-term savings account, FDIC insured for living expenses. If you can, try and save beyond your employer-sponsored plans. If your employer has an IRA, try and save beyond that. And then also, consider contributing the maximum allowable amounts to any employer-sponsored plan that you might have. It might seem easier just to put in the bare minimum, but anything extra you can put in there, it only is going to benefit you in the long run. But again, having said that, we always encourage you to consult your savings institution or savings investment advisor for this type of guidance. So we've come to the end of my portion. And I want to thank everyone. I know some of this might have been very basic, but it's so fundamental, and we feel that it would help you along the way in planning for a brighter future. At this point, what I'm going to do, however, is I'm going to turn the presentation over to my colleague, Jeff Ambrose, who's going to talk more about protecting your business. So, Jeff, turning this over to you. And Matt, thanks so much for taking us through the slides on this. Really appreciate it.
Hello, thanks, Graham. Jeff Ambrose here, and I'm going to talk to you a little bit about needs for your business. I've recently been at a few IEEE events, and I've spoken to a lot of young entrepreneurs, actually, that were in the program, and they were talking about ideas for a new business, or I have 2 or 3 people, we're going to partner together, and we're going to go out on our own, which is great, right? That's the American way. And just last week, one came up to me. There was actually 4 of them, and there were going to be 4 partners. They all had their own unique skill. And the question was, well, what do you do? What is this? Like, well, it's business insurance. And I'm like, well, why do we need that? I mean, we all kind of have our skill. We all kind of know what we're doing. We've already had a business plan we've put together, and we kind of know what we're going to do and who we may look to get work. And my response was, well, that's great. But what you need to know is that you are going to need to have business insurance in order to do all the things that you're doing. And there's a lot of reasons for that, but one of the main reasons is the people you're going to get work from are going to require it. So part of what we're going to talk about now is what are the different types of business insurance and why do you need it? So if you look at the first slide, what is business insurance? Why do you need it? It exists to protect your investment in your business, along with those of your investors and co-owners. It also helps you provide financial compensation to people who work for you should accidents occur. Most commercial insurance coverages are optional. Some, like workers' compensation, which we'll talk about in a little bit, are mandatory in most states. Your state governments will determine which is required, but I'm going to add to that, so will the business partners that you choose. They are also going to determine what business insurance is required for you to do work with them. Next slide, please. So here's an overview that we're going to talk about quickly on the different types of business insurance policies that you need to know about and should consider getting as part of your business plan when either you're starting a business or if you have one now and you're looking to expand into bigger projects with bigger companies, etc. So every business is different, and some of these businesses we're going to talk about may not necessarily be applicable to you depending on what you're doing. So the ones we're going to talk about are general liability insurance, property insurance, a business owner's policy, also known as a BOP in our lingo, workers' compensation insurance, commercial auto, commercial umbrella, and professional liability. Next slide, please. So what is general liability insurance? Here's the major types of events that this type of policy will cover. Accidents and injuries to both people and property that occur on a business's property or arise from its operations, including bodily injury. An example would be, which is always an oversimplified example, was if you have a client that comes to your house, maybe you don't have an office yet, and they come to your home office and they trip on the front step walking in and hit their head and cut themselves. I know it's kind of a ridiculous example. That's probably not the type of claims you're going to see all the time, but it could happen. Medical payments made for minor injuries sustained by visitors on a company's property. Kind of goes along with what I was just saying. Liability for damage to others' property in the course of doing business. If you're going to go to a job site, or I say job site meaning could be anything, but you're going to the company and something you do damages something on their property, your insurance, your general liability insurance, will pay for that. That's part of the reason why, as we'll talk about in a little bit, a lot of companies will require that you have general liability insurance just to come into their property and to do business with them. They don't want the risk or liability, and anyone who comes on their, any business partner who's doing work there, they expect that they would take care of any potential damages. You'll see a lot of times in contracts that you'll sign with people, they'll have one of the clauses will be insurance requirements, and you'll always see general liability on there. Accusations of slander or libel as a result of a company's advertising. A little more, now we're not talking bodily injury anymore, now we're talking accusations of slander or libel. Again, that's part of what this will pick up. Other events including fire damage in case of rental property. General liability is very broad. This is a very, very brief discussion of it. There's a lot of endorsements that can be added to it, taken away. Your insurance professional will help you with that based on the unique needs of your business, but just know this is a very general overview of general liability. Next slide, please. Property insurance. It'll provide for the repair or replacement of your covered losses of man-made disasters. So tornadoes, hurricanes, etc. is not typically covered. This is a big one, especially for young entrepreneurs. Maybe you're doing some things, again, outside of your home. Keep in mind, if it's a home-based business, your homeowner's policy will typically not cover any business property losses. So if you have business computers and maybe you're making prototypes of something and whatever it is that you have, and if it's a home-based business, typically a homeowner's policy will not cover it. So that's one of the reasons, again, why you would need property insurance. It's typically a requirement if you're carrying a loan on your business from a bank or another financial lender. A co-investor, which I know a lot of the young professionals I'm talking about, especially when they're doing like apps, etc., they talk about having angel investors. Well, a lot of times those business partners are going to require you to have this insurance too. Again, it's for their own protection. Yes, they're giving you money, but they don't want to pick up any unnecessary liability. Another endorsement to this business interruption insurance is available if your operations are suspended, that helps you replace lost income like rent or payroll. This is important if you actually have an office or location that you're renting. This kicks in. Also, if you have temporary office space. Again, there's a lot of different endorsements. Keep in mind the general basic parts of it is that if your insurance gets interrupted for maybe the building burned down, etc., there are a lot of financial benefits to having this insurance. Next slide, please. Okay, so for young entrepreneurs, if you're starting a business, a small business, maybe it's just you, there's what's called a business owner policy, or BOP, which is kind of a combination of the policies we just talked about. This is a pretty standard coverage, if eligible for it, that you would be looking to get that would meet the requirements of any contract that you're given. It basically combines the property and the business liability and the business interruption that I just talked about. It's all in one policy, and it protects, fire theft, lawsuits, vandalism, smoke damage. There's a lot of different coverages in here. The bundling of all these coverages is convenient, and it's definitely more cost effective. The thing about BOPs, though, is not every business type is covered. A big majority are, but depending on the types of work you do and where you do them, you may not be eligible, and you may have to get the individual policies. But it's usually when you're in hazardous environments. If you're doing work in a coal mine, which you probably wouldn't, but like a nuclear power plant or some other power plants, etc., where you're on site and there's a lot of potential risk, you may not be eligible for a BOP. Again, that'll always be the default option that they'll look to try and get you, and if you fall outside of it, those other individual policies will do the same thing for you. Next slide, please. Okay, workers' compensation. One of the first slides I did there, it talked about it. This is a state-mandated coverage if you have a business. And every state kind of has their own way of figuring out the rate and what's going on, but it covers your employees' medical bills and some or all of their lost wages if they suffer an injury from job-related duties. It's a legal requirement in most states. If you have one or more employees, you've got to buy it, period. This is definitely, a must-have. First, I know you may say, hey, I'm working for myself, etc. It's really a must-have coverage. And again, if you're getting a contract from a future employer, if you have your own business, they're going to require you have it. What's important to note about workers' comp coverage is that it's not a substitute for health or medical insurance because it only covers work-related injuries or illnesses. So you still need health insurance for whatever medical issues you may have. This is as a result of your employee getting hurt while on the job. And as I said, the rates and premiums can vary by state, and they're based on many factors, including your industry, the numbers of employees you have, and your company's safety record. A lot of formulas here. A lot of states do them differently, but again, your insurance professional can help guide you through the process. Next slide, please. Commercial auto insurance. So you're saying, well, I have a car, I already have insurance, why do I need commercial auto? Well, again, I'm sounding like a broken record, but to go back, when you get your contract from your future business partner, this is going to also be one of the things that's required on there with general liability insurance. Kind of go hand in hand. Provides coverage to you, your employees, and the vehicles you own, lease, rent, or borrow, both on the road and off. Many states make this coverage a requirement, and this kind of policy provides financial protection against liabilities that arise from incidents involving these vehicles. The difference between commercial auto, one of the other ones between commercial and personal, it typically provides a higher policy limit than personal auto, which is typically needed for businesses because you have a lot more potential risk in there. You may have a client in the car. You may, who knows, there's a lot more risk there. They offer you higher limits. Also, under most commercial auto policies, your employees who drive your insured vehicles will be covered under the policy's terms. And under most of these policies, your employees' own vehicles will be covered when they're using them for company business, if and when any claim exceed the limits of their personal auto. So as you can see, it's kind of almost an umbrella coverage for a personal auto. If you have someone you say, hey, go over and stop by and drop, this is probably a bad example, but drop off these plans on your way home tonight, and you use it and you get in an accident, or your employee gets in an accident. Well, they were working during business hours to do this, and they were doing work, and they may say, hey, I was working, why should my own personal auto cover this, and then my rates go up? This is as a result of business. Again, commercial auto insurance is typically required by any future contracts you have. It's kind of a must-have as you go forward. Next slide. So commercial umbrella. The primary purpose of this is to give you added protection for other lawsuits and accidents. It kind of sits on top of policies as additional coverage if you exhaust the limits of your policies that you may have, whether it's property, the general liability, the auto, etc. Like I said, it's a backstop to general liability, filling any gaps that you may have as well as limits. It also protects against additional liabilities not covered by these other policies. There's so many different things out there, and these individual policies aren't meant to cover every situation. The umbrella over the top of it is kind of designed to help do that. And again, you can use this to supplement your commercial auto and general liability. But the one thing that the umbrella will not cover and go over the top are losses associated with the professional liability or errors and omissions insurance that we're going to be talking about here shortly. And I'll explain that in more detail. Next slide, please. See, I led right into it. Professional liability insurance. This is near and dear to my heart because this is actually the program that I run for IEEE. As part of your member benefit insurance package, we have a professional liability program. So what is professional liability? It's financial protection for professionals against consulting and or design errors and omissions. This is a big deal as well especially for the young entrepreneurs here that are doing, anything to do with software. Really, anytime that you're offering your advice and your professional advice for others for a fee, you have risk, and they have risk. And more, this is a requirement along with the other insurance that we just discussed to have for your business. I personally believe it's a requirement whether they ask you to have it or not, because this is protecting your reputation. You're giving expert advice based on your background knowledge as an engineer. Let's just use that one for a minute, the advice versus design. A lot of people get hung up on, well, I don't really design anything. I just review the specs, and they ask me for my opinion to make sure it meets all applicable codes and industry standards, etc. I didn't design it. I just gave my advice on the design. Well, that opens you up to a tremendous amount of liability because you need to understand how it works in the business world. You're going to say, yep, everything meets this standard, this code, etc. And then something goes wrong. Well, they're going to sue the person who designed it, but the crafty legal team of these firms too are also going to sue anyone who had anything to do with it. And that would include you for the advice that you gave, that everything met the code, everything was, whatever it is that you design or consult on, you will be brought into it as well. To not have this insurance would mean that would come out of your personal pocket to pay it. And it also could hamper your business relationships with your clients because they may be asked to take on that burden too in lieu of the fact that you don't have it. So a lot of businesses in their contracts, in the insurance requirements that we talked about before, besides the general liability and the business auto and the property, they're going to have a professional liability on there as well. What does it do? It pays defense costs and damages in the event of a covered claim. That's key. Most claims that come through for professional liability are legal costs. So they may incur $100,000 worth of legal fees only to find out that you didn't do anything wrong. There were no actual damages. You don't have to pay to repair or fix anything that may have gone wrong, but it took $100,000 worth of legal fees in order to get you to that point. A majority of claims are legal fees, and that is covered under these policies, less any deductible you may have. It also typically covers bodily injury and property damage if the claim is a result of your negligent design. That's a key component on the end. It'll cover bodily injury and property damage if it's a result of a negligent design. Bodily injury and property damage are covered on the other policies we just spoke about in terms of property or general liability. But if it's a result of a design and someone gets hurt, then it would also be covered under your professional liability policy. And again, many firms require that their consultants or sub-consultants carry this line of coverage. To add just one more piece to this, many firms don't have all the expertise that's needed for a project. You may know how to do 80% of what they're asking, and you have a partner or a peer who's a specialist in the other 20%. So you hire them as a sub-consultant for you so that you can get the job and do it as though it was all you. It's important that your sub-consultant have professional liability insurance as well, because if they don't, if a claim came in and it wasn't a result of your 80% of the work you did, it was a result of the 20% that you hired out, you're still going to be liable for that. Your policy is going to respond to that, and most claims typically result in higher premiums the next year. So it's important that your sub-consultants carry the same types of insurance down the line as you do as part of an effective risk management strategy. Next slide, please. So we've hit it. We've hit business insurance very quickly. It's not that complicated, but there's a lot of stuff to consider. But the biggest thing you have to consider is you're starting a business or you've got ideas on what you want to do for a business. You've got some partners that you're talking about getting into it. You're putting a business plan together on the services you're going to provide. I will tell you, as part of that discussion and part of the strategy, if you haven't already done it, do it now and put a bullet in there, business insurance, and do the expiration. IEEE can help you through our program. Reach out to us at the, I can't even speak, IEEEinsurance.com, and we'll help you guide you through the process. With that, my part of the presentation is over. I believe we can open it up to questions.
Thanks, guys, for a really informative webinar. Really, the two sides of it. I do have some questions actually. I guess I'll start with Graham, because he kind of presented his part first, and we do have some questions coming in. The first being, you presented some really, I guess, eye-opening statistics in terms of disability, especially for young professionals and young people. Is there any insight onto why that number is growing in terms of why there are more disability or disability claims for younger people?
Well, I think there's a couple of different answers to that question. Number one, I think that you are starting to see, with respect to disability itself, you see younger people out there are becoming more and more active, not only from just active as, from an exercise perspective, from a physical fitness perspective, but also, they're active in their community. They're just engaged more, and they're doing more that opens, it exposes them to that type of risk. So, and that's, I don't want to say that's a good thing that people are becoming, it is a good thing that people are becoming more active, but there is always risk associated that you're going to get hurt or something's going to happen. So really, that's why you're seeing that. Now, there is also another portion of that, while people are still, are becoming more and more active, enjoying the great outdoors, if you will. The other thing that we are seeing more and more incidences of in today's age, workplace stress, which leads to mental and nervous claims. So we see, on the whole, mental and nervous disability claims going up and up, and I would tell you that you can go to any social security website, especially Social Security disability income, and it will show you how do I say this? It will show you the rate of incidents all of those are starting to increase. So those types of claims are really starting to skyrocket. So we've got, more physical activity, greater risk there, but we're also seeing more incidences of nervous and mental claims.
So mental health again is still covered under that type of insurance.
I would tell you this, Matt. That's a great question. Insurance companies, there generally is, but what a lot of insurance companies have done is that there are limits associated with that. And I would tell everyone listening, with respect to disability, there's always going to be certain limits that the specific insurance company places on those. So I would encourage each and every one of you, if you are exploring this, is to read the policies very carefully, consult your local agent, and get as much information you can on that, because most of these policies are not designed to pay something unlimited. There are certain limits that can be reached.
Okay, fair enough. That's actually that was one of the pointers you did end up giving, was stay informed and things like that. Maybe going back to Jeff in terms of talking about business, you give a lot of information that I didn't even know was required for most. I assumed it was required for bigger businesses, not even for startups. So let's say I'm an entrepreneur and I'm starting a business. Where do I get this information in terms of finding out where all my coverage is needed? Like where can I get the information to know what I'm legally obligated to cover? Because it seems like I'm legally obligated to cover a lot of things, just judging from your own presentation there. Could you maybe comment on that, on resources to find exactly what I need to be covered?
Yeah, well, a couple of things. One, when you start a business and you're going to do work for someone, right, and they're going to pay you, and you're going to sign an agreement, some form of agreement, you're going to see it there. And it's pretty standard all the time. Like I said, they're going to always ask for general liability insurance. They're always going to ask for commercial auto insurance. And they're definitely going to ask, depending on what you're doing and the scope of it, they're going to ask for professional liability insurance. So you're always going to see a requirement on there. Where you can find it, I mean, again, the IEEE program is a good place to start, to reach out and ask us what's needed. I will tell you that those are the basics that you'll need. As for the state, that's something you want your insurance professional to help you with, because there is no right answer for each state, and since this is throughout all of them, California is different than Illinois and the requirements. So some of those coverages, the insurance professional is going to be able to help you, because they have the systems that they will input their data into that'll help tell them. So a good rule of thumb, and you hit it right on the head. A lot of people, because I've spoken with a lot of people at the events I've been going to, and especially some young professionals at the events I've been to recently, and they're excited about what they're going to do, and you should be. And the issue really is, well, what do I need other than my knowledge about my industry in order to actually produce money, and revenue? So it's good to know. It's good for everyone to know, which is why I said put it into your business plan. If that business plan includes saying reach out to IEEE to ask for more information on what's needed to start a business, or a local agent, etc., that may provide you guidance, but I would definitely leave it to people who focus on it to help guide you. I'm sure on websites, if you Google business insurance needed, there'll be a bunch of them that'll give you a general information, but when it comes to actually doing hard research, you're going to want to talk to someone directly to help guide you.
Okay, and maybe a follow-up to that question is, how affordable are all these business insurances? Because if you're a startup and you're pre-revenue and you're kind of scraping for every dollar, how affordable can it actually be?
Well, let me give you an example of the BOP that we talked about, which if you're a smaller firm and you're not doing a lot of incredibly risky stuff, those minimum premiums on those could be $400 a year.
Okay.
So if you qualify for a BOP, roughly $400 a year probably. Professional liability is a bit more individualized, The way those are rated is firm revenue, the types of projects you're working on, and the services you provide. So minimum premiums can also be that low for a very low limit. But let's look at reality. Most people are going to require you to have $1 million in coverage, which is the industry standard. So you're talking minimum, again, not knowing anything about the business, probably around $1,000 a year as a minimum. But certainly when you get to that point, you can easily get a quick quote by completing an application to help give you an idea of what you're looking at. But the thing to consider on that as well is it's based on firm revenue. So it's going to be cheaper when you start, but as you go forward and you're producing more revenue, you know, the premiums will always go up. I mean, if you remain static with your revenue, obviously they could remain relatively static, but they pick up the coverage going all the way back to when you first got the policy. So as long as you keep it in place, if you started with the policy right now, today, and 3 years from now, you keep renewing it every year, any projects you did from the first year are still going to be covered. And each and every year going forward, it'll pick it back. They call it the inception date. So they'll pick any projects you did that are coverable, obviously, going back to that date. So it could be as cheap as roughly $1,000, but again, it depends on firm revenue and what you do, but that's a general idea.
Perfect. Maybe just one last question, going back to Graham. I think you did end up touching on this. When, as a young professional, when is it a good time to actually invest in all those different types of insurance like you mentioned, especially the disability insurance, and then even just life insurance? Are all those at the same time, or maybe just to spread out costs? Should a young professional kind of start the disability and then maybe a couple years later do the life insurance, or what's your opinion on that?
I would tell you, Matt, that's a great question. I would tell you that as respect to life insurance, there is no time like the present. And the reason I say that is with respect to life insurance premiums, especially term insurance, for an individual that is in their 20s or 30s, even into their 40s, life insurance rates are very, very cheap. Matter of fact, again, I would encourage the person who submitted the question to go to IEEEinsurance.com, and there's a rate calculator out there. Put in your information and you can see what the rate is. Very, very competitive. So for life insurance, the sooner you get in, the better, because you can buy a large volume of insurance for a very small price. Disability, I think that also, it depends on where you're at in your life. I mean, if you are, if you do have a lot of financial obligations and you're, and there you have dependents, get in sooner rather than later. I mean, rates are based on age as well. Age, income, all of that is taken into consideration. So delaying that is probably not advisable, but for each individual, it all depends on their personal situation. But if you have the opportunity to cover those risks at a younger age, do, because you will end up financially benefiting from it in the form of a lower premium. Now, the only other thing I would tell you is that, there are a lot of insurance products out there. Another one, and we didn't talk about it today, but I'd love to come back and talk about it at some other point, is long-term care. And that's another trend we're seeing in today's society. Long-term care costs, nursing home costs continue to skyrocket. Well, there is coverage in place, and the earlier you get into that, the better off you are. But that's a conversation for another day, but thank you for the question.
No problem. No problem. Maybe just one. I have a quick question right here. So, if I buy life insurance right now, I'm 25 years old, and then what will I save on my premium if I buy it when I'm 35? Like, will it be cheaper for me for my buddy who only started when he was 35? When I end up being 35 years old, will it be cheaper for me?
Well, here's the answer to that. If based on your scenario, and you said you got it when you were 35. Did I hear you correctly?
Or 25, and then my other friend got it at 35.
If he got, yes, well, I'll tell you this: if you got yours at 20 and he got his at 35, yours is going to be cheaper. Now, the thing about term life insurance is rates on term life insurance do increase. Generally, they increase in 5-year age bands. So every 5 years, you can expect an incremental increase in the premium amount. But the difference, Matt, though, between a premium for a 20-year-old and a 35-year-old, there's not a large gap, but there is a gap. So the sooner you can get in, the better.
Fair enough. Yeah, that makes sense to me now. Well, I'd like to thank both you guys for giving a very informative webinar. I just have some final concluding remarks here. Please, for all of our viewers, please complete our feedback survey. Our next Young Professionals webinar is, in fact, on November 24th, when we talk to the personal insurance about specifically Canada and their policies here. So please look forward to that. Please check out our new career-based services, Mentor Center and Resume Lab, two excellent resources for developing your own young professional growth. If you have any suggestions for other young professional products and services, please check us on the web or send us an email. And from that, I would like to conclude this webinar and thanks again to Jeff and Graham for giving such a really nice, informative webinar. Thanks.